Today, we are talking about a philosophical hurdle that you've got to get over and a mindset that you have to adopt if you want to be a successful investor. First off, I want to apologize. I know it's been a while since I made a video. I've been on vacation, and then my wife and I are actually moving to a new city. That's why I'm actually in like an empty room, or I guess staged room is the right word, right? I also just kind of wanted to do something different. I think we spent a lot of time on the nuts and bolts, the math side of value investing, and I think that's super valuable, but you gotta sometimes touch on the other side, which is, what mindset should you be bringing to the table, okay? So what is this secret mindset I'm talking about, okay? Well, it's not that much of a secret, okay? Warren Buffett only tries to communicate it every time he talks, okay? So this book, The Essays of Warren Buffett, is amazing, okay? This is all of the Berkshire shareholder letters. Somebody's taken them, broken them down by category, and then organized them into this like very nice distilled version of just Warren Buffett's wisdom, okay? I could probably start a YouTube channel alone just talking about this book, and I don't think I'd ever run out of material, all right? But what we're going to do is talk about one specific passage. It's like it's a Bible, huh? And that one is on page 90. All right, so it's a quiz from Warren Buffett, all right? So y'all ready for a quiz? Here he goes. If you plan to eat hamburgers throughout your life and are not a cattle producer, should you wish for higher or lower prices for beef? Easy, right? Likewise, if you're going to buy a car and you're not an auto manufacturer, do you want higher or lower car prices? All right, another easy question, right? I mean, the answer to both of those is you want the price to be lower, right? All right, final question though. If you're going to be a net saver for the next 5 years, so you're going to be depositing more than you withdraw, do you want stock prices to be higher or lower? Do you want to buy at PE ratios of 10 to 15 or buy at PE ratios between 20 and 30, okay? The answer to that should seem as obvious as the hamburgers, right? But it seems so obvious, but it's so hard to think like that. In fact, I, for a long time, didn't even think like this. But once you see it as something that you're going to be constantly buying, constantly adding to, then you realize, okay, I actually want to buy it lower because eventually, if you made the right pick, right, it's going to come around and you're going to be able to sell it higher. So you want to buy as much as you can whenever it's low. All right, so who does this apply to? Let's talk about that. So what I have here is actually my YouTube analytics channel, okay, over my whole lifetime. So September last year till now. And this is all my view hours broken down by age group and gender. Okay, so you can see in my age group, almost 3/4 of my viewership is between ages 18 and 44, okay? 5% in this first age group, 40% in this second age group, and then 31%. So these numbers added together is like 75, 76%. If you're in that age group, you're like me, right? You have a steady source of income through some job, okay? And you're saving some amount per paycheck or per year or per month, it doesn't matter. You're going to be a net saver. You're not pulling out for retirement yet, right? So you're one of those ones who wants the stock market to go lower while you're adding, okay? One more thing about these analytics, because I think this is pretty funny, okay? Female watch hours, 1%. Oh, man. All right, so they're 2% of the views, but they're really not even sticking around. Look at this. They dropped from 2 to 1%. All right, so either they don't like me or they don't like investing, okay? So if you take anything from this video at all, take this. Don't talk about stocks and investing on the first date to the ladies, okay? All right, enough of that. Let's bring this home. Let's close this out. Okay, so what I have here is the S&P 500 PE ratio, and this is telling you how expensive the stocks are over that time period, all right? What multiple of earnings are stocks selling for? You can see throughout those years, the average has been 16, the median's been 15. Right now, we're sitting at about 20. Okay, which is a steep drop from the 30, 35 we were at previously, but still high compared to normal, right? This is the question I want to ask you, okay? If you're going to be saving money for the next 5 years, do you want to be saving here? Or do you want to be saving up here, okay? Because think about this. The people that were saving money in the 70s and 80s made out like bandits, man. They were saving low, they bought low, and then they probably moved it all to bonds and stuff as they got older and near retirement, okay? And so that's awesome. The people getting screwed are the ones who have been consistently saving at these higher PE ratios. Well, let's be honest. Anybody who's consistently saving in the stock market's going to do very well. But just relative to other people, you are better off saving consistently whenever you're at lower PEs, right? I hope this kind of helps illustrate what we're trying to talk about. I do want to leave you with one more analogy though, because I think this is my favorite one. And I swear this is from Warren Buffett too, but I cannot find where I read it. I think I just remember him either saying it or writing it or reading it somewhere, okay? Here's the analogy. The investor who celebrates high stock prices is just like a driver who is excited about high gas prices because he's already got a tank full of gas. I mean, the insanity there is obvious, right? But that's how people view the stock market. But if you want to be a contrarian and you want to make money off of other people's mistakes and other people's fears and emotions, that's the mindset you have to adopt. But that's all I got. I really appreciate you watching. Like and subscribe. I'll see you next time.